Hello traders and investors, welcome back to the Trend Trader channel. In today's video, we are going to be looking at information about a South African ICT company. That company is Altron. For those that don't know what Altron is, we'll be going through some of the information. We'll be sharing with you why we like this company. At the end of the video, we'll be looking at the chart so that you can identify potential trading levels. If you haven't subscribed to the Trend Trader channel, please consider subscribing. If you are a returning viewer, please make sure that you click the like button. That really helps this video to reach as many people as possible. Right, as we said that Altron is an ICT company. They provide different solutions to their customers. They operate in three segments. There's digital transformation. They also have their own platform, and then they do have managed services. The company has recently released their financial year ending at that it's 2021 financial year that they presented recently. Right, so we're going to be going through those financial results for the year that ended on the 28th of February 2022. As you scroll on the website, you can see that they have different solutions from cloud services to other services such as data management, security, and also automation. Like I said, these are all ICT related stuff. If you're in the ICT space, you will understand what it means. We know that their group CEO is the legendary Mteto Nyati. Then depending the group CFO is Nicholas there. So there is some information that you're going to find from this. We can see that in their website they report 5.7% increase in continuing operating revenue. But remember that Altron unbundled some of their businesses last year. They listed Bytes Technology separately. So in this case, we won't be necessarily interested in the earnings per share, but we'll be looking at the headlines earnings per share. As we know that all these one-time events, they do affect the bottom line of any business. Okay, so if you go through this website, you'll be able to find under financial reporting, you can then get interim result or annual result. In this case, we are looking for result for the year that ended in February 2022. So meaning that we're going to be finding the result for the financial year end. We can also look at the brief presentation of those results to see the highlights that they're talking about from this result. We can see that the revenue, it grew by 5.7% to about 7.9 billion. And then the operating income is up by 34%. It grew to just under 500 million rand. Then we can see that the headline earnings per share increased by 37%. That is impressive. Any earnings per share that are above 20%, I consider them to be impressive. That means that each and every share, it earned 51 cents, right? When you look at the normalized headlines earnings per share, they increased by over 80%, which brings us to 75 cents per share. But the working capital decreased by 35 million. We will see why the working capital decreased by 35 million in that past financial year. Then when you look at the gross invoiced income, you can see that it grew by 5.1%. It went from 7.8 billion to about 8.3 billion there. Okay. Then when you look at the headline earnings per share, we've already mentioned that it grew by 37% to about 51 cents per share. And then when you look at the dividend per share, remember when they were unbundling Bytes, then they paid the special dividend in the past year. So that is why we see the percent change that the dividend has decreased by over 99%. That is because they compare it with the February 2021 result where the special dividend was paid. In this case, they will be paying the ordinary dividend. So the special dividend is gone. That is why there's such a huge decline in them. Okay, so it's not something that it should be alarming. We expect that to happen. And then there are some things key business highlights that they want to talk about there. They've acquired another tech company. Again, they disposed some of the businesses there depending on the kinds of business that they were disposing. And then other companies, they were able to do more business. As you can see that they managed to collect over just below 1 billion rand from different debtors in the public sector during that COVID-19 pandemic. We know that everyone is tightening their belt because we don't know how long COVID-19 is going to last with us. We saw in the US they already have a monkeypox, so we already have a whole lot of different things that are happening. So it's good to see that the company is able to collect some of their money that it is owned during this tough period. And people's favorite, we see that they speak about the dividend there. They said that they are happy to pay the dividend. The dividend is going to be 23 cents per share. That is, and then this is the final dividend. So the dividend that is going to be paid now is 23 cents. The 31 cents that they mentioned them in the interim result, they paid a bit of that dividend. So now this is an addition to that. But remember, in South Africa, we pay a 20% dividend withholding tax, meaning that you can expect to earn 18.4 cents, which is going to be the net dividend that you can expect to reach your stock brokerage account. And then the dates that are important to remember is that in order to participate in the dividend, you need to have bought the shares before the end of the 31st of May 2022, and then from the 1st of June the shares will be trading ex-dividend, meaning that you can expect the share price to drop by that 23% dividend that they have declared. But you've already covered the video. If you haven't seen that video, it's there in the description, showing you the different dividend dates. What do they mean? What you need to know when it comes to those dividend dates. We mentioned in that video that the most important date is the record date, which is going to be the 3rd of June. The record date basically is when they look at which investors hold those shares. Those are the people that are eligible to receive the dividend. So even if you can trade before the come dividend date, if your shares are not on the record on that record date, you may not receive the dividend. Or even if you buy the shares after the ex-dividend date, if you manage to find your name inside that record book, then you can expect to receive the dividend Monday the 6th of June. Okay, so now we see that this company is profitable, as we saw through the result there. We saw the gross income, it increased a bit, even the revenue it increased by 5.7%, and the headline earnings are increasing. When you look into the full balance sheet of the business, because that is where I'm interested a lot. In the balance sheet, I'm mostly interested in the current asset. This is the column that I always pay most attention to. The non-current asset mostly are physical structure, like a property, plant and equipment. There is really not much that you can do. The goodwill is mostly subjective, so any company can just plug in the number for goodwill. Well, it's based on fact, but it's usually subjective. So under current asset, one of the things that I look for is the cash and cash equivalent, because I need to understand how much cash the company has. So from this we can see that the company has 757 million rand in cash, but that's over half decrease compared to the previous period. But you need to remember that at that time they had unbundled that other company. That is why there's this 50% decrease. If you go through this financial statement, you can go look at the notes and see the reason for that significant drop in cash and cash equivalents. But the good thing that we see here, we see that the company has a 5.4 billion of current asset. Then we compare the current asset number with the current liabilities there, because the current liabilities are all the obligations that they need to meet in under 12 months. Then you can see the total current liabilities, it's 2.9 billion. So it means that this business has a positive net working capital, because they have this 2.9 billion there of current liabilities. But they also have other liabilities that are classified as they are held for sale. So if you add this, the number of the current liabilities, it does, or the number of liabilities, not necessarily the current liabilities, it does go up a bit. So it's not something that of a great concern. I'm hoping that the company will be able to dispose these assets on time, and then put back that cash into the company's current asset there. Then when we look at the statement of comprehensive income there, here we just want to see the profitability of the business. We already know that the business is profitable, but here we are looking at the continuing operations, not the operations that they have discontinued. If you look at the bottom here, you can see that they have discontinued operations. So we can see the revenue, they had the revenue of 7.9 billion there, and then the operating profit before tax was 142 million, and then they paid tax. Then the operating period for the year was just a marginally 79 million after tax, right? And then when you compare that with the 2021, but it's a restated number here that you can see. So comparison, the profit decreased a bit from 94 million rand to just 79 million rand, and the reason for that is none other than that discontinuation of some of the operations. If you look from the previous operations that they have stopped, you can see that they had the revenue of about 1.6 billion there, but in terms of profit or loss, they incurred the loss of about 174 million there, from a profit of 12 billion compared to that previous year. Then when you look at the net loss for the year, it's just about 95 million rand compared to a 12.1 billion profit that they had in that previous year. So as long as you remain mindful of that previous transaction, you wouldn't be worried about this marginal profit that they have reported for the year. Okay, so what else can you find here? What other interesting things, right? I want us to look at the cash, how much cash the business has. Then let's see if you can find information on cash. Let me just try to browse a bit slow. Okay, from this, what you can see, we can see the basic earnings from continuing operations. The earnings are just down to about 20 cent there from 29 cent. Then if you look at the diluted, they are below 19 cent, which is almost equal to that 20 cent, again from that 29 cent. Then when you look from the discontinued operation, you can see that the numbers were high. That's about 32 rand per share, but then from the previous year, which is 2021, and now it's just below 50 cent there. So since now the company has been trading independently for over a year, we expect these figures to improve significantly in the years that are coming. Then when you look at the cash flow statement, then here we just want to see the amount of cash that the business has in its thing. So we can see the net cash and cash equivalent is just under 600 million rand there. It is down from 804 million rand, but it's good to see that the business has a lot amount of cash. This cash can be used for a lot of things. It can be used for share buybacks, which increases the value of each share. If a company buys its shares from the market, it can be reinvested in the business to grow the businesses. It can also be used to pay dividends or special dividends. But it is nice to see that the cash of this company, it's growing up. It's still positive, even though some of the other things are a bit negative. So based on this information, then you can go through and read as much as you can based on this thing, on this company. So sometimes I also want to see which companies own these companies that we are buying, because if there is institutional sponsorship, then we can see that the business, it has people that believe in the businesses. Remember, we are just retail investors. Our knowledge of this investing thing is limited compared to big companies that have a team of investors, people who are well knowledgeable about the investing businesses, or investing business. So it is important that you are able to write on their success. As long as we see that they have a good institutional sponsorship, then we can hope that the business can continue to operate very well, because those experienced investors, they will be able to steer the ship. So if you look at the material shareholders, shareholders that own at least 5% or more of this company ordinary shares. As you can see, there is a Coronation Asset Management which owns about 28% of the issued capital share. Then we have a Value Capital Partners. This is an interesting company. You can just Google it, what Value Capital does. They have about 20.33% there. And then you can also look at Kageso. All the other companies are there, but you can also look at Kageso, which owns just about 4.41%. Kageso is also another good investment company. Then obviously there's always going to be those big fish like Sanlam Investment Management there. So whenever you're buying this company, we can see that there is institutional sponsorship, which means that the shares are liquid. If you want to buy and sell those shares, it should be easy, because these guys, the major shareholders, they are the ones that enable traders or investors, retail investors, to get in and out of the position easily, as long as they have all these liquid shares. Because if, for example, Coronation Asset Management wanted to sell there are 113 million shares, it will take a number of transactions. And also you want to see when was the last time these asset management companies they bought these shares. But for the purpose of this video, we will not look into that information there. So we can see that these top 6 shareholders, they own about 78% of this business. What is a bit worrying is Coronation, which owns over 27%. If Coronation can up their stake to about 35-36%, then they can be able to trigger the clause to buy out other investors. I'm not saying that it's something that will happen. I'm sure Coronation is happy with the stake that they have in the business. Hopefully they are not planning to buy more and then trigger that clause, because well, it would mean that they will be taking something good from other investors. Okay, so now that we have this information, we are positive that this is a company that we might be interested in buying. Then let us look at the chart to see which trade levels we can identify. But before we go forward, I need to remind you that the South African Top 40 Index and the All Share Index at this moment, it is a bit bearish. It is trading below this key level here. So as long as the Top 40 trades below this key level, we need to be cautious whenever we are trading, because it's possible that the general market can continue to go down there. If the general market continue to go down, whatever setups, bullish setups that we see in the stock market, they can actually turn down, as there's going to be that selling pressure from different companies. But remember, it's not just the stock market, it is the market of stocks. Some companies are strong, some companies are weak, and they're not going to perform in the same manner, because it's companies that are showing different strength. But just do keep in mind that the general market is a bit weak at the moment, right? So the share code for Altron is AEL. There you can see that we're looking at Altron Limited. So we are buying the ordinary shares, which is a class A shares. So the company, after that unbundling, we can see that going to 2020, the company was a bit bullish. Then it topped somewhere around 30 rand per share before starting that recovery. Then somewhere around 36 rand per share, that is when it unbundled. Then it created that gap. As the share price was rebalanced, or the net asset value changed, it brought back the share price to just somewhere around 12 rand per share. So a lot has been happening. If you were a shareholder of Altron before that unbundling, you will have received those Bytes shares. So that gap doesn't mean much, because you would be given shares equivalent to some amount there. Hopefully the value of investment will have remained the same after that unbundling. So since then, that unbundling has been happening. I just want to make sure that you can see the volume easily there. So since then, you can see that the share price has been trading sideways, been consolidating, going up and down there. for quite a while, and then it reached this low just above 6 rand per share. And then last week we saw the share price closing above this key moving average, and that is what got our attention here. But do keep in mind that the previous attempt to break above this level, it failed, as the share price quickly came back below this level. So if you bought the shares on this breakout, when it came back and then it started to trade below this level, you will have exited your position. Remember, in this channel we always talk about the use of a stop loss. We have a video there where we're showing viewers and subscribers how to use the different order types on EasyEquities. So we always have a stop loss there in case the share price come below the level of interest. So when we look at this, we are also interested in buying this recent breakout. We'll show you the volume now. You will see that the volume is a bit high. You also look at the volatility of the stock. It is down there. It is just below 1 rand per share. So a low volatile environment, and this breakout, it gives us an opportunity to buy as many shares as we can. But remember, we always think about risk. We never think about how much money we can make. Normally in a good market condition, we risk between 1 and 2%, but in this case we are in a bearish market, so we can drop that down. You can actually risk between 0.5% and 1%, whichever amount that you are comfortable with. We're going to link a video here. We're talking about that 10,000 rand challenge. We made an example on how we calculate that risk, so make sure that you check out that video on how we do this position sizing calculation there, right? So in this case, we are going to drop our from that normal 1 to 2% risk to just between 0.5 and 1%, whichever risk amount you are comfortable with there. Right, so what we're expecting to see from this setup, we would like to see the share price continue to trade further up there. But if it doesn't go up, we're going to have a stop loss, as we always do. So when you look, this is the breakout candle there that gave us the share price of 9 rand 64 cents per share. So we're going to look at the previous week. This is a weekly time frame. We are using a weekly time frame, not the daily time frame. So we are going to look at the low of the previous week candle, which is somewhere here. Then we will take a multiple of this 180R, or maybe have a stop loss somewhere around 6 rand 50 per share, meaning that if the share price go up, we'll be happy to hold that position. But if the share price drops below 6 rand 50 per share, then we will lose that 0.5% of our capital. Remember, whenever we use a stop loss, it leads to permanent capital loss. You need to understand that before you use the stop loss. It leads to permanent capital loss. But somebody can say, okay, I won't use a stop loss. I will just maybe risk 5,000 rand on this position. If, for example, you put in 5,000 rand in this position, and this position goes to below 1 rand per share, it means that the value of your investment as well is going to decrease from 5,000 rand to just below 1,000 rand, meaning now you will be down 4,000 rand, even though it does not result in permanent capital loss, but emotionally it will be damaging. So that is why it is important to always use a stop loss, because it is just an insurance. In case the share price drops, then you are willing to give a fraction of your capital to the market and then sit on the sidelines until a proper setup is coming there. Again, I mentioned that we're looking at the volume. So the reason why we want to buy this is because the volume, it shows that that breakout happened on a volume that is above that average. You can see the volume of that breakout there. It's impressive. Another thing, we have a greenish candle here, not this volume candle, but when it was rejecting the lower prices, it happened on an above normal volume. It shows that there was an accumulation of that stock. I think that was just after the result were announced, and then since that large green volume, the stock has been trading higher, which led to this. But then again, do keep in mind that these setups can fail, especially at the back of a weak market. That is why it is important for us to have a stop loss. So this is the stock that will be adding into our portfolio. But taking into consideration that the stock market is generally weak at the moment, we will be having a smaller position. And then once the share price, maybe it break above this level somewhere around 12 rand, then we're going to start buying more of those shares, increasing our exposure in this company. Then we'll be anticipating that the share price is going to continue to climb further up, and that the business is going to remain profitable and continue to pay us those dividends there. But we are not buying a company because it pays a dividend. We are buying a company because we see a proper technical setup, we see the good price action that is supported by this decent amount of volume. That is why we trade. Other people, they trade for other reasons, but whenever we trade, we are simply trading a price action, and then we incorporate risk management into that. That is why we always have a stop loss. Other people, they look for different kinds of margin of safety. For us, our margin of safety is the use of the stop loss and adjusting our risk to acceptable levels depending on where the capital is of where the general market is at. So at this moment, we are putting between 0.5% and 1.5% of our capital at risk, as long as that general market remains weak. So that's it that I wanted to share with you. You can find all this information. You can go to MoneyWeb. You can get a snapshot of the fundamentals of Altron there, and then if you go to that Altron website, it's altron.com, then it will take you to this website of Altron. Then you can look at that information. You can see the operations that they do. They have a digital transformation, they have managed services, they also have their own platforms. We know that they are heavily involved in Netstar, which is a car tracking company there. So you can see all those different products and services that they have, and then you'll be able to download these financial statements and go through them and find information that can help you to make an informed decision. For us, we just wanted to share a brief snapshot and then the chart analysis. Once again, if you haven't subscribed to the YouTube channel, please consider subscribing. If you have subscribed and you haven't liked this video, please smash that like button. The YouTube algorithm, it loves that. And if you have any questions, comment, suggestions, or even complaints, just make sure that you put them in the comment sections. We always respond to all the comments that we get into our videos. So that's it for today. I will see you in the next video.